The Vivriti Group was conceptualized in 2017 with an aim to build digital infrastructure to power debt markets in India. Over the last 4 years, the group has built significantly on its vision. The Vivriti Group owns and runs Cred Avenue, India's largest online debt platform. Cred Avenue provides investors an access to discover and execute transactions directly. Vivriti has also set up Vivriti Asset Management that helps domestic and global investors access Indian debt markets indirectly through tailored funds. To enable participation from investor categories that may not log into the digital platform, Vivriti Asset Management provides thematic and customized options.
When we launched our debt marketplace, which is today called Cred Avenue, we realized over a period of time that there would always be a category of investors that don't access a digital marketplace, but will benefit tremendously from their access to the performing credit space. And hence the idea of Vivriti Asset Management was born, a platform that would sit on top of our digital marketplace. So Vivriti Asset Management today sits in what we call the performing credit space, creating a value proposition for insurance, for retirement funds, for international investors to find value into the Indian debt markets.
Investors may engage with fund managers to determine the most suitable combination of risk and return that they are comfortable with. Vivriti Asset Management adds a layer of physical diligence and quarterly monitoring to the digital assessment tools available on Cred Avenue. Vivriti's arena is the Indian performing credit market, a space where over 3 million small, medium and large enterprises seek debt for growth. These firms comprise of an estimated 40% of India's GDP, but only 11% of Indian bond markets, other than AAA and AA rated firms. Vivriti aims to bring massive pools of capital to this arena by A. Building transparency, standardization and process efficiency for debt transactions, B. Solving for investor concerns on governance and risk, and C. Structuring relevant products that meet investor requirements of risk and return. The performing credit space has the ability to provide long-term stable and high returns to investors if we go about it well. Institutional investors and domestic family offices have barely scratched the surface here on account of their inability to monitor governance and credit risk well. Let's hear more from the founder about how Vivriti's funds have the necessary ingredients that the market lacks.
Our funds today add 4 parameters that you will not find in the asset management space, especially the alternative space. Right? 1, we focus on diversification. It's important for us to ensure that individual exposures are small so as to enable the investor to get a very diversified set of exposures across the portfolio, which sharply reduces risk. The second is a technology-centric approach. Today, Vivriti, through its platform, Cred Avenue, as well as its own efforts, can access thousands of data points across its underlying issuers, which when mapped well against the peer set, the economy and past performance, can give a very, very clear sense of how risk is evolving across its portfolio. Vivriti's funds today add significant impact. By definition, we are enabling bond market access and financial inclusion to a set of enterprises that did not have this kind of access before. We are bringing global pools of capital to accelerate the journey of Indian enterprises. This has an impact on specific areas like healthcare, digital infrastructure, gender empowerment, financial inclusion, as well as bringing superior access to thousands of enterprises over the next 5 years.
Vivriti Asset Management seeks to build the performing credits category, a massive white space that lies between the mutual funds on one side and venture or distressed debts on the other side. This space is highly lucrative for risk-adjusted return if monitored and managed well. Our funds target a yield segment of 8 to 16% together with stability, frequent cash returns and risk protection.